Dan Leach back here in New York City at Benzinga's Fintech Day. It's great to be here, and it's even better to be with Tom Maguire, AVP of Product Management at Nasdaq. Great to see you again.
Great to see you again.
Let's talk about this event and, why it's so important for these, kind of events to really kind of get people to understand where we're at.
Yeah. I just finished a panel upstairs on 24-hour trading. The topic of market regulations, market protections, market access came up, and I looked around the room, and I you are the people that are going to be making these solutions available to the investors around the world, right? And I think that's what makes this great is it does bring everyone together, and it really puts topics into focus of how we all think about this evolution together. So it was a fun moment, really put it back on the crowd, say some of these challenges are yours to solve, right? So.
Well, having people like you here is a very important part of this as well. And I wanted to talk to you. We talked recently about 24-hour trading and how some people want to say, oh, maybe it's not. It's here.
Yep.
It's going to be here.
Yep.
It is the future is now. For those out there that maybe seem a little overwhelmed about, thinking about algorithmic trading, which we'll get into a little deeper in a second here, that 24 hours, how do I handle this?
Yeah.
I only want to stay up for 18 hours a day. Can you alleviate some of their concerns? Because I know what you guys are doing at Nasdaq is fascinating.
Yeah. So two things of note. One, it's really not that much different from what happens today. The markets open at 4 a.m., they close at 8. In fact, ATSs are trading overnight. So if you want to trade overnight, you can, right? So when the exchanges move to 24 hours, a lot of it is extending the things that make our markets great. What's really good, a focus of Nasdaq's really has been how do we ensure that you can't enter the market and lose your shirt? This is not a casino. These are investable products. So how do we remove some of that risk? And
Sure.
Our focus has really been on market protections, market regulations. How do we think about and how do we enact rule and policy to constrain the runaway moments where maybe the exuberance of the markets begin to tip into the irrational, right? So that's been a lot of our focus. That continues to be a focus of Nasdaq. What's made our markets great and resilient for the day will extend to the night, and everyone should feel confident transacting in that environment because it's what's built generations of wealth from the U.S. capital markets to date. So
yeah, it's beautifully said. It's like back in the 1920s and 30s and 40s. It's the same concept, just in different levels. It's the same thing now. We're just advancing again, and I feel like as long as people understand that and know that. There's going to be changes in maybe the way you deal with certain things, but the principle's all still the same, right?
Yeah. Well, go back to the same time frame, right? Buying in lots,
right?
Was the concept. We were still doing fractional pricing. The evolution has been consistent. Who would have thought that at that time you could own a fraction of a share, right? So as you look through, the ways that we've transformed the markets to really allow for just broader access. This is just a natural extension of that evolution.
What do you think, Tom, is the, biggest misconception as this kind of, like you say, it's already here. 24-hour trading basically is here.
Mm-hmm.
But as it gets even further, in the advancement, what do you think the biggest misconception is? Because I think that's important that people understand that maybe they think something about 24-hour trading one way, and that's not really the way it is.
Yeah. I think right now the 24-hour has an expectation or there's this Wild West component that comes when it's being discussed. And the reality is, and there's been a lot of research done, that's just not the case. Price formation is happening earlier, but it is still happening.
Sure.
The correlation of where the market opens at 8 p.m. today in the overnight ATSs to where the markets open at 9:30, you see highly correlated information flow. You see highly predictive opens based upon where it happened 12 hours earlier. What we're going to see is a broadening of participation, and that participation will drive liquidity. Liquidity will drive more rational outcomes, will improve to the markets for all participants when the exchanges enter next year, the end of next year, and the institutions become more comfortable with these concepts. You'll see another affirmation of those liquidity dynamics and a smoothing of that volatility that currently makes it seem like this is something that is a bit scary and create some apprehension. But in reality, what we're seeing is the opposite, that these are rational markets and people are participating effectively around the world.
Yep, that's the key, right? Rational is what it always is bad and needs to be. I love to say that the future is here. It's now. Algorithmic trading, that's going to be a big part of this as well. And I just wanted you to kind of expound upon that.
Yeah, algorithmic trading is interesting. when I was in school, behavioral economics was just really starting to become its own discipline. And in the irrationality of the human investor is hard to model. What people like, what they don't like, and how they express that by buying and selling securities is still something that AI, despite all its advancements, has yet to quite figure out. But again, as just mentioned, as participation expands, as you start to see the broadening of the marketplace and liquidity come in from new pools, not just from retail, but the institutions, asset managers, asset owners, when they become to enter this market, you'll start to see a return towards that modelable outcome. And I think that, like, there is a home for AI and the advancements of the modeling and the algorithms that kind of help accelerate and broaden markets today. And you'll see that extend in time to the overnight periods as well.
It's just incredible stuff. Before I let you go, I'm a big Back to the Future guy. Take me in Doc Brown's DeLorean. Give me 5, 10 years, maybe 15 years in the future. I still want Gray Sports Almanac, by the way. But can you let me know where you see things going and how you want Nasdaq to fit in?
Yeah, I think that movie just had an anniversary, by the way. Is it 30, 40?
40 years.
40, yeah, I saw the poster.
And I'm dating myself. I was 8 years old when that movie came out. 48, man, 40 years. Yeah, where do you see things going?
Yeah, I mean, the answer really is around like access, controlled access. How do we, there's a survey that comes out every 3 years, a survey as consumer finances, and it really, they talk to the investing household, and they try to figure out, where they put their money, how are they developing, and consistently year on year, all the research shows that the capital markets are the biggest engine for wealth generation, for advancement economically. And what we're doing with equities moving to 24, and how derivatives and crypto and indexes and all of the functioning components of the markets continue to evolve, I think you see a broadening of that wealth generation engine, and you see participation really extend, not just to the American public household, but to the world. And that's going to be, what a time to be alive, as I think you said during our last interview.
One of my favorite things, because it really is. And Tom, it's a great time to be with you. Tom Maguire, AVP of Product Development at Nasdaq. Thanks so much for your time. It's great to see you.
Thank you. Great to see you.